Welcome back at the forefront. Joining us this morning is the Chief Economist of RCBC, Mike Ricafort. Good morning, Mike.
Hi, good morning, Attorney Karen, and to your viewers. Nice to be back to Bilyonaryo.
Mike, there has been a truce or ceasefire that was announced yesterday. How have the markets responded to this news?
Well, positively, it was a pleasant surprise, Karen. It was like yesterday morning when U.S. President Trump announced that tentative ceasefire between Israel and Iran. So finally, it went through effective midnight New York time. So oil suddenly went down to $65 per barrel. That erased practically all the increase since the conflict started between Israel and Iran on June 13th, Friday the 13th. No more increase. It's back to where it started. So that's good news. Imagine, it came from as high as when it opened last Monday morning. It opened at $78.
Yeah.
And it stabilized at around 72, $73, even since late last week, prior to the U.S. attacks on Iran's nuclear facility last Saturday, which was unexpected. But nonetheless, it goes to show that oil is it's the dynamics between demand and supply. They're still somewhat well supplied in terms of oil. But of course, we're not complacent about it. We're still on our toes because we don't know if there would be indeed supply disruption, especially at the Strait of Hormuz, which is controlled by Iran. So far, no disruptions yet. That narrow strait where practically 20% of the world's oil produced in the Middle East passes through. So we have to, it's still a wait and see mode on that. But so far, so good. No disruptions yet. The latest increase in crude oil in local fuel pump prices, it was staggered last Tuesday and another one by tomorrow, by Thursday. So we'll see if that there would be substantial rollback on it.
Okay, well, Mike, you mentioned that it halted the increase in fuel at the international market. So do you still see that the price per barrel might reach that $80 mark, which is what people were predicting?
Well, so far, Tony, Karen, so it appears to be that it's having difficulty breaching the 78 mark. Well, it's not the first time that we saw that peak near 78. The first time happened almost 2 weeks ago, Friday the 13th. Then shortly thereafter, oil spiked to, when trading resumed a few days after, it reached a high of a little less than $78. And it corrected lower to 71, 72. It stabilized there. Then suddenly, during the surprise U.S. attack on Iran's nuclear facility last Saturday, when the markets were closed, it was $73. Then it spiked to 78. Then suddenly it went down. And even before Trump announced the ceasefire, moments before that, there was some retaliation by Iran in reaction to that. The missile attacks on the biggest
Air
base
base,
of there at Qatar.
in
It was
Qatar, yeah.
successfully intercepted. The price of oil from $73, it went down to as low as $68.
Oh, that's
Then
great, yeah.
that was the immediate reaction. And then moments after Trump announced the ceasefire between Israel and Iran, suddenly it went down. It plummeted further to $65 to $66. That has been the range since yesterday, and now it's stabilized there at $65. So this is like the lowest in 2 weeks since June 11. So erased all the increase. So now the dollar.
Mike, when you're saying that this erased the increase in the last 2 weeks, then why are we still facing this hike? Like yesterday, there was an increase of about an average of 250, 2 pesos 50 for diesel. And then tomorrow, there's supposedly another increase. How does that work ba? Yung mga suppliers ba natin dito, they buy really on a weekly basis, or do they increase just based on the market rates regardless of whether they have an old supply or already a stock of fuel?
It's a combination of both, Tony Karen, because market forces are primarily at play. Competition, big players, small players. So there are greater choices by our consumers. Meaning to say, if you notice, there are some small players that price much lower than the bigger players, and so on and so forth. But that's even bigger players can well, they do compete. Some of them in some areas, especially in non-prime areas where, say, rent is lower, the taxes are lower, and the cost of operating also lower. So, it's market forces, regardless of, if you come to think of it, some of them their inventories may be much cheaper before the conflict started on June 13th. And, well, well, there may be some market players who hedge their positions as a matter of prudence. When there was a spike over the past 2 weeks, especially since June 13th. So some of the market players may have been caught with more expensive inventories and some with cheaper inventory. So the markets are free. They're free to do whatever they want. Competition being there, regardless of the cost, whether they make money or lose money on their inventories. And there you go. That's the beauty about it, of competition. And you know, they would adjust because this is the world price. This is those the latest increase may already be a lagging indicator, so to speak, reflecting the time when oil prices were still relatively higher at 70 levels, but now they're down to 65. So it's just a matter of time. Give it a few days, and there would be some rollback coming in. And also the peso exchange rate also appreciated lately. As of this morning, it's doing somewhere around 56.60 to 56.70 levels. That's the strongest for the peso in more than a week, and that already improved from as high as 57.655 last Monday, the intraday high. So that's also a function because our almost all of our oil, all of the country's oil requirements are imported, and they're settled and paid in US dollars. The thing is, the dollar peso prior to the conflict, shortly before June 11th, it closed at 55.885.
Yeah,
So
and
it's
it
still
held at
below
that
50.
rate for several weeks. So now, with the conflict biglang tumaas, so are you projecting that the peso will strengthen with the
Yeah,
current developments?
well, yeah, it's now improving. The peso is appreciating. Imagine, Tony Karen, that's almost a peso better from 57.655 intraday high that we saw last Monday, when the markets priced in the effects of the latest U.S. attacks on the Iranian facility, because that was the fear escalation. There were talks of a possible, uh, U.S. already being dragged into this war. It could lead to the risk that it could lead to a wider war. But so far they've handled it well calculated, in the sense that diplomacy has been the priority for many countries, including the biggest Gulf states, the likes of Saudi Arabia and the neighboring countries there. And they even, some of them even condemned the missile attacks that passed through the territorial space of Qatar. Its condemnation of
Yeah,
the retaliation by Iran, and it's really the move towards
yeah.
diplomacies to prevent further escalation from happening. And there's so much at stake in the world. Even the big players around the world, like even the likes of China, they purchase a lot of oil from the Middle East, and including from Iran, and that's why they're all careful, because it's for the best interest of everybody, for diplomacy to prevail
Yeah.
rather than escalation of war, and that has been being priced by the markets. Suddenly Trump having this clout, and really announce and force upon the ceasefire between Israel and
And
Iran.
Iran. Mike,
Yeah.
there were a lot of OFWs that also had to go home to the Philippines because of this conflict. Have you seen any effects on OFW remittances that
Oh,
arose
def-
because of this conflict?
Oh, definitely, Karen. I've been monitoring this for, especially, the Israel Hamas war started October of 2023. That's nearly 3 years ago. And we have seen already some decline, some slight decline in remittances, say from Israel. For obvious reasons, because now there's disruption in their economies. Deployment has been kind of restricted, so to speak, and there's even repatriation for those who are willing to come back here in the Philippines. But some of them, with 30,000 Filipinos in Israel, some of them opted to stay, a large number, because of their livelihood. And there's that. They're because they're the missile attacks are being dealt with the Iron Dome, with the missile defense system, and so on. And but the thing is, yeah, you other well, there may be some slight decline also in remittances. Even tourism, they're one of their biggest businesses there in the Holy Land. Those are disrupted.
Mm,
No tourism yet. Airspace practically, no planes there. They
yeah.
evacuated the planes. The airspace are cleared because of it's very risky. The missile attacks between
Yeah.
Iran and Israel. And now there's ceasefire, hopefully. We'll see how long will this take. But definitely, there's economic impact there. The employment of FWs and the remittance that they send to the country, to the Philippines, would be adversely affected, would be reduced. And no deployment, no new deployment. That's a policy now for safety purposes. And some OFWs who are willing to come back because of the heightened alert level, yeah, definitely that's going to weigh
Yeah.
on
So that
everything.
is affecting our economy. Mike, what do you see would be the impact of this conflict if it's prolonged for another couple of months? What would the impact be for the Philippine economy?
Well, because the Philippines imports almost all of its oil, Attorney Karen, and our requirements is the Philippines it's like 500,000 barrels of oil per day. We already came up with a sensitivity analysis. So should there be, say, every $10 increase in oil would increase the import bill of the country by around $5 million per day. And in a given month, multiply that by 30, that's around $150 million per month. And in a given year, multiply that by 12. So that would be around $1.8 billion additional oil bill for the country. But so far, oil is still low. That's not much of a problem yet. But of course, we don't want to be complacent about it. We have to be on our toes. Would there be potential supply disruption? Would there be potential escalation? But we all know they're all working for a more diplomatic solution about it. And the balance of powers, trying to, going forward. But
Yeah.
so far,
So
oil has been low.
in a few words, would you say that you're optimistic at least about a more diplomatic approach and that this conflict would be resolved very soon?
Yeah, Attorney Karen, the first confrontation between Iran and Israel happened April of last year. So this has been more than a year already. And it occurred like around July again of last year. And the new game changer now, for the first time since June 21, US is dragged into this. So it's a direct confrontation, direct attack by the US to Iran's nuclear facility. And there were reports that there was limited damage, limited impact, despite the earlier pronouncement of a significant damage on the nuclear facilities and capabilities of Iran. But the thing is, going forward, so we'll see. It's still wait and see how everything goes.
Okay, so
If
we're still
this
at the wait and see. Well, thank you so much, Mike Ricafort, and thank you for your time today. We hope to have you in the studio next time.
Yeah, sure, attorney Karen. Thank you so much, and your viewers have a pleasant morning, everyone.
Thank you so much.